What's up, biggerpockets? Today I want to talk to you about how to leverage local banks, and I'm going to use some real-world examples from myself and why these banks have been so impactful and powerful to my real estate investing journey, and then kind of give you some tips and tricks on how you might find these and build those relationships. So let's dig in. What's up, guys? I'm Dave. You may recognize me from co-hosting some of the biggerpockets money shows, or if you're a military person, you've probably seen me around in the military forums. Today, we're going to talk about leveraging local banks, and I want to tell you why this is important first. So I'm going to give you a little bit of a backstory about, well, really, I'm just going to brag about some of the loan products that I've gotten over the last couple of years. So I work with this really small bank here in Springfield, Missouri, and they do phenomenal things, right? Like I'm at the point now where I can walk in the bank and instead of walking up to the teller, you can sneak around the side and just walk in and high five the VP of commercial lending and his assistant and his entire team. And, we joke, we have cell phone numbers. Pretty decent relationship. This bank has allowed me to do some things that most banks would not. For example, he will let me refinance a loan at 85% loan to value immediately after purchasing. So no seasoning period. Prime example, I bought a house cash on Monday, and on Tuesday, I ordered the appraisal to refinance 85% loan to value off the appraisal, pulled all but $5,000 of my initial money out of the deal with no rehab. Now, I'm not saying that that's what you need to do, but I'm just saying they work really quickly. They will also do 25-year amortization, 85% loan to value on pretty much anything, and I've got two different loan products with them. One is fixed rate for that entire 25 years with no balloon. And we've done that on our hotel and 2 apartment buildings. We got a 4.75 locked for 25 years, assumable. And then the other is a floating, an adjustable rate, which I know makes people cringe, but they'll put a ceiling. So this allowed me to start off with a lower interest rate. And for my smaller residential stuff, they preferred the ARM, and I'm okay with it because the ceiling that I have set with them is a 7. No balloon for 25 years. And I know that at 7% on those smaller residential properties, they'll still cash flow. But it allowed me to start at 4% instead of 4.75. There's some perks in there for me, but there's also some perks in there for the bank. But nonetheless, really solid terms. In fact, this bank even allowed me, and this one's kind of crazy, we bought this hotel, we put $100,000 into capital expenditures, right? Updating it, blah, blah, blah. We thought we were gonna get in for 10% down with an SBA loan. Some things changed and ended up being 15% down. And we said, hey, we've got the cash, but we just threw $100,000 into updating this because we weren't planning on that extra 5% down. So we used that money, and the bank actually counted our CapEx towards our down payment, which I've never heard of anywhere else, right? So they're willing to work with us because we brought some loans in and we have made our payments and they know we're good for it. How is this bank able to do this? Some of the terms that I've talked about, other people are like, oh my gosh, no bank can do that. Well, they're a portfolio lender, so they hold the loans in-house. Because they're not selling those loans off to a third party, they don't have any other rules or guidelines to adhere to, and they can afford to work with us on loans, right? Now you're asking, okay, well, that's great, Dave. You got this awesome bank. How do I find one? Well, there's a couple of different things that you want to look for, right? Ideally, you want to look for a bank that has 3 to 5 branches, right? Anything over 5 branches, they might be getting too big to be super flexible on the local side, under $1 billion in assets under management. This allows for that intimate connection, the relationships to build. They know, and trust you, they'll lend you more money. You can make a difference, right? So let's say you have a $5 million worth of real estate that you can move into a Chase bank account. Chase is gonna be like, cool, thanks, man. Whereas $5 million is a much larger drop in the bucket on less than $1 billion portfolio. Now, it's still not a huge drop in the bucket, but it's enough for them to say, hey, we're gonna talk to this guy. This allows you a little bit more leverage because you're actually able to benefit the bank, which means that they're gonna want to work with you. Okay, so how do you find these guys? One is just networking with local investors, whether that's through a real estate investor association, Facebook groups, meetups in town, just talking to other people who are investing in your area, because the investors who've been around for a little while have probably started to establish these relationships with the banks. Why reinvent the wheel if you can get that answer directly from another investor and they can say, hey, I got a guy, I'll make an introduction to you. I love making introductions to my lender. So if you're in the Springfield, Missouri area and you're buying a lot of real estate and you want an introduction, I will gladly make that introduction if I know that you're not a time waster, right? Because I'm not gonna waste my lender's time because I value that relationship. I need to make sure that I'm introducing the right people to them, but I love making that connection because every time I connect them, it builds good favor with me, right? So any good real estate investor who has that relationship will be willing to extend it to you as long as they know you're not just, kind of a wasting time. Take a look at these, rack them, stack them, go on your computer and do some research on, their assets, number of branches and whatever, or just pick up the phone and call. Hey, do you guys sell your loans to a third party or do you hold everything in-house? You don't necessarily have to have a portfolio lender, but I love them, right? Because they are able to do things for you, with you, that a bank that's tied to Fannie, Freddie, whatever third parties buying their loans isn't going to be able to. If you're doing residential loans, you're still going to have to fall under some of those guidelines, but I'm talking more the commercial investor stuff. I just want to highlight why this is so important, and that is that when you have this relationship with a lender, you can have open conversations about really anything, and you never know what they might approve. For example, letting CapEx count as a down payment, fixed rates for 25 years with no balloon, adjustable rates, but with a ceiling that still makes sense for you. I've had conversations with them about if assets, distressed assets that they have to recoup on deals that went south, and they'll even work with you to see about, providing a solution for someone else within their community to buy those properties in order to take it off the bank's, their assets, off their ledger. That's the word I was looking for, off their ledger, so that they can continue to lend those dollars. Because, and not to get super complex into the banking world because I am not an expert, basically, in order for banks to lend money, there's all these different, multiples, right? And so if a bank has to foreclose on a property and pull it back and it's a real estate owned by the bank, that actually hinders the amount of money that they can lend out, which hinders the amount of money that that bank can earn. So you are doing the bank a favor by pulling that asset off of their ledger, off of their books. And so they will work with you on these things, and there's a lot of opportunities out there. So bottom line is this: local banks and portfolio lenders can offer really, really, really good terms, and fostering those relationships is very beneficial to you as an investor, because as that relationship grows, you'll be able to learn more things, you'll have conversations, you'll be able to find ways that you can help the bank and they can help you, and you can work together on stuff, and it's a win-win relationship. And you're not going to get that with a massive national bank. Hopefully you can get out there and find some good local lenders to help you take your next step and get further along in this journey. If you got something out of this video, make sure you like and subscribe, and just remember, we were all rookies once too, so you got this.